Hello fellow investors, welcome back to Investing with Tapan, your go-to destination for everything finance and investing. I'm Tapan and today we are diving into a topic that is a game changer in the world of personal finance, the tax-free savings account, better known as TFSA. So, what is TFSA? TFSA is like this magical vault which protects your investment from an evil devil called tax. Yes, and this amazing magical vault is offered right here in Canada. So in today's video, we will be discovering how you can make the most out of this magical vault. First things first, let's understand what makes TFSA so special. It's a tax sheltered account.
Another financial jargon?
Tax sheltered account is basically an account which is like an umbrella. It protects your investments under that umbrella from the evil tax rain. Anything that is under that umbrella is not affected by taxes. It allows your investments to grow tax free. Yes, you heard me right, tax free.
So how do I make this money grow tax free?
What you need to do is open up a TFSA with any brokerage. I personally use Wealthsimple. More about it on a future video. Step 2. Add funds to your TFSA. Now, if you're working a job, you get paid a salary, and that salary is already an after-taxed amount. So you don't have to really worry about anything. But if you are having a business, then please note that you cannot just deposit all your business revenue into the TFSA. Why? Because any money which is contributed to the TFSA should be an after-tax dollar, and that tax is the income tax which you should have paid on your money. Use those funds to buy stocks, ETFs, GICs, and many other eligible investments. That's it. Done. Any dividends, capital gains, or interest generated in your TFSA will not be taxed, even when you withdraw your money. Now you must be thinking that Tapan, this thing is too good to be true, and you are partially correct. There is a small catch. The small catch is that the government decides every year on how much money you can contribute. For example, in 2023, the amount was $6,500, and in 2024, the amount is $7,000. Now let's say you were more than 18 years old in 2009. So as of today, you can contribute a total sum of $95,000. Hold your horses, Tapan. You just said that it's $7,000 for 2024. Where did the $95,000 come from? Now, the contribution room in your TFSA does not just disappear if you do not contribute to your TFSA. So let's say you never contributed a single penny in your TFSA since 2009. So all the contribution room for all the years add up and form this magical number of $95,000. Now, please note that the minimum age to open up a TFSA account can vary from province to province. Here in Ontario, it's 18, but in British Columbia, it's 19. So what I suggest is just do a simple Google search on the minimum age required to open up a TFSA account so that you're not getting into any troubles. Now, let's assume that you turned of the age last year. You decided to open up a TFSA. Now, instead of contributing full $6,500, you only managed to contribute, let's say, $6,000. Now, you're really upset that, oh no, I just missed out on $500 of contribution room. You did not miss out on that, because in 2024, the contribution room is $7,000 plus any unused room from the previous year. So your last year's unused room of $500 can be carried forward to the next year. So this year you can contribute up to $7,500. But let's say your case is even more complicated. Let's say you contributed just $1,000 in 2023 and you withdrew that $1,000 back. Now you're upset that, oh, I just lost that contribution room of $1,000. No, you did not. Because whatever money you withdraw can be added back to your contribution room the following year. A fun fact about TFSA is that your money does not really get locked in. You can withdraw it anytime you want without any tax consequences. Now, a couple things to keep in mind. Number one, US dividends are subject to a 15% withholding tax in your TFSA. A withholding tax just means that even before you get those dividends, the taxes will be deducted by the CRA. So let's say if you own Microsoft stock in your TFSA, and if you are getting paid $100 in dividends, then 15%, which is $15, will already be deducted before you get those dividends. So you will get $85 instead of $100. But for Canadian dividends, there's no taxes, so you'll get 100% of the Canadian dividends which you earn. Second thing, now please remember that if you are contributing more than your available contribution room, you will have to pay a 1% tax penalty. Yes, I will leave the link in the description box below. It has a lot of information about this tax penalty, so I strongly recommend that after watching this video, the first thing you do is go to check out that link. Now, personally, I don't like to contribute more than what I am allowed. In fact, I like to contribute a little bit less than what I'm allowed. So if I'm allowed to contribute, let's say $7,000, I will only contribute $6,500 or $6,600 max. I always like to have a little bit of that buffer room just to be safe. Now, there's a major misconception about TFSA. Let me give you an example. Let's say you just turned off the age and you were finally eligible to open up a TFSA account. You opened up a TFSA account and contributed the full amount of $7,000, which is your room. And you invested in some very good stocks. And now those stocks are worth $8,000. Should you be worried? Does that affect your contribution room for the next year? No, it does not. Anything you earn in your TFSA, whether it be dividends, interests, or capital gain, will not affect your contribution room for the next year. So next year you will still be allowed to contribute the maximum amount which is set by the CRA. Alright my friends, that was the tax-free savings account. If you did learn anything new from the video, then be sure to give this video a thumbs up, subscribe to the channel because that really does help this channel a lot. Until next adventure, stay financially fabulous my friends. Catch you on the flip side where money grows and laughter flows.